Good noonish, around noon, 11:45. Welcome to Options Center. This is Sunday. Sorry, I'm getting all my days mixed up. Gosh, I got to start better here. Thanks for joining me here. We're going to go through SPX on multiple time frames. We're going to check out SPY on the daily and the Elliott wave count for our long term and our alternative count. We are just a couple points away from taking out the low from Friday. So we're looking at these bullish counts being negated. Now, I will say the market may pop tomorrow. We might have a green day tomorrow. I know that kind of goes against what I was talking about with seasonality, but we had OPEX last week, and that really kind of, messes things up, shifts things around. And then we had VIX on Thursday with a 10% over a 10% close to the upside. So we were looking for Friday or today for a bounce. And I mean today, I mean Monday. So we were looking for a bounce, an 85% chance of a bounce happening. I didn't know that in the past. I got this off somebody else that I follow, that there's an 85% chance when the VIX closes to the upside over 10%, has a 10% move, 85% chance that you will get a bounce within the next 2 days. And so we were looking for that on Friday, and then we didn't get that on Friday. This could be all out the window with OPEX, but we're looking for possibly a green day. And I'll show you why on the lower time frames on the 65-minute when we get down there. So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. We like to do these videos often, so make sure you hit that notification button. And don't forget to like the video. That's the most important thing you could do, is like the video to help keep this channel rolling and expanding and getting out to other traders. There's other ways that you can help in the description below. If you do donate, that goes to it's my wife runs our company we advocate for victims' families. Okay, SPX on the monthly time frame. This thing goes way back to 20. Oh geez. Let's see if I can pull out the max one. Okay, this goes back to the 1929 crash here. All right, so we have our trend lines all the way up here. We tagged it up top. We think we have a major top here with these channels as well. So we're looking for a lot more than just a pullback. We got this pullback, and everybody thinks that this is over. There's always an alternative. So we were thinking, hey, maybe this is an ending diagonal to the upside. That's a possibility. It still is a possibility. But we are bearish. We think we tagged a very important point, and we think we're going to go lower from here. The channel is a possible point that could get us to that bull point. If we hold this channel, we start continuing to the upside. But we think we go lower, possibly to this area here. I know that's really, really far away, 2,500, but even a possibility of much lower. Okay, so before we get all doom and gloom, what we have to do is we go through this top-down process to just keep ourselves in line and keep ourselves with the trend. So we have the monthly here. We still have a few days left in the month, but right now we're looking at we're back under that 8 EMA. So we close under this 8 EMA, and this is our trend indicator. Our 20 is headed to the downside, it's declining. Our 8 is turning over. And so we're kind of expecting this trend to continue. We had our trend down here. It was a very difficult trend. You see the market want to buy, want to hold, got underneath it. And then really, we had this box for months and months and months now. and we oscillated through this box. So we're going to retest this box, this area around the 20 simple moving average, and that will be a really good spot for a test. You know, we'll probably see a reaction off of it, but we'll see how we react to it, and we'll see what this box does. Does it hold price, or do we drop through it? Okay, going to, let's bring up a couple indicators. We have our bearish crossover way over here in 2022. We had our pullback to about the 0 line. We started to cross upward, and that's when our possibilities were, and we still have the possibility of a bullish ending diagonal to the upside. You see, it's a three. We're counting this as a 3-wave move, which could be a correction and then head lower, or if we had an ending diagonal, that would be a 3-wave move up. We get a 3-wave move down, and then wave 3 would continue as a 3-wave until we get 5 motive waves to the upside, all 3 waves. Okay, but we are trying to cross. We still don't have a red histogram. We're trying to make that cross now to the downside. We have our early indicator of the slow stop. We have a sell signal on this one. So right now we're in sell mode. We're in the early stages of sell mode. We have not confirmed the momentum to the downside, but I think that's starting now. Okay, let's move over to the weekly time frame. On the weekly, we still have our very conservative bearish situation. And this bearish situation says we're just going to correct with an A, B, and a C. Now with this A, we have a 3-wave move down, 3-wave move up, and where this wave C would equal A would be a very conservative spot right down here at the bottom of the channel, around the 3,300 area. So that's just our conservative look. We want to keep that in mind. I think that's where we're going to start off, at least. And excuse me. All right, sorry, I had to clear my throat there. Okay, so we're looking for the ABC in a very conservative correction to end down here. With this, let's go ahead and put the indicators back on. We had our bear cross on the weekly time frame, so we're headed down. Momentum is gaining down here. We're getting slightly into oversold territory, so we may be looking for a bounce sometime. But you know, with the momentum heading down, these indicators can really scrunch down here and get much lower. Same with the slow stoke. So it's all negative, very weak in the market. Momentum's heading down. You see in the weekly time frame, we have further to go. That's what that's saying. All right, let's go down to the daily. Now the daily we're going to spend a little bit of time on. We're going to look at it from different aspects, from the ES, SPX, SPY. We're going to check out the Elliott wave and also the alternative count. Now, I have a hard time. They're both bearish counts, and I'm assuming that we break the lows. And with that assumption, there's only two options. Really, two main options that I think can occur. And so both of them are going to be bearish. One's just going to be a lot more bearish than the other. Starting off. Okay, so we have SPX on the daily time frame. Trend is our friend. We're breaking the trend at that. Back tested with a wedge. That wedge broke down. We're testing that 200-day moving average, and I think that people are getting really bearish, and rightfully so. But they may have put on a lot of positions here, put positions into this move, and I think we're going to shake some people out here on Monday and perhaps continue the trend down for Tuesday. And just I think we're going to try to test this area that I've been talking about for so long, this green area. That's the zone, those consolidation zones that if you're new here, I have a lot of videos, but I'll repeat it. I repeat it all the time anyway. You don't have to necessarily go back. I would love it if you did, but you don't necessarily have to go back. We have consolidation areas. You'll see it on SPY. That's what this zone is. So it's a big zone. I think we'll get a reaction off of it. Start to back test trend lines and then head lower to maybe fill that zone and then kind of oscillate inside of there maybe for a minute. We'll see. We'll have to see what the Elliott wave count shows and what the indicators show there. But I do think we'll be extended in the lower time frames coming down to this 41. On the SPX, it's going to be the 4180 area. Let's look over to ES. ES is the futures for the S&P 500. I look at all of these different charts because I know this. Let me switch this up. I look at all these different charts because we get a different point of view, and it kind of helps us make decisions. So you see these circles, that's the consolidation areas, these dots that I'm talking about, and we're kind of getting to that zone. And you know, we should find a few buyers here. We did early on Friday. This was a doji candle. We found some buyers, retail buyers at that point, and we're probably going to get a few buyers just to say, oh my gosh, you know, we didn't make a low. This thing could go up, and I don't think it'll go up far, but I think it's enough to build some momentum and head down lower to test this zone. Let's go to SPY, and then we'll check out some indicators on SPY. And you notice the point of control is down there as well, right in the middle of that zone. That's because we have a lot of trading volume in these areas. So that's a natural gravity point to where a price action is going to end up, and possibly reverse off of, or just get sucked into to move lower. Okay, so I have the zones highlighted as well. What we did here was we have a 3-wave move down. We're still 3 waves, but it's the 420. Look at the low here, 420.18, and our low here is 421.08. We're just a point, literally a point off of the lows. So it's not negated yet. The bull position is not negated, the bull scenario. We have a 3-wave move so far, and with 3 waves, that's just a correction. The moment we get a penny underneath this zone, the low, is when we negate the whole bull process, and then we can concentrate 100% on what type of bearish move we'll have. That's what we're moving over. That's why my language is starting to switch to the other side. I've been bearish for such a long time, but you know, we had to keep in mind that we're looking for some sort of bounce. We're looking for a bounce. This thing could go higher. If we got over this top at 438 area, that would be bullish, and I think we actually go higher. None of that's happening right now. So we have to really, the bulls have a lot of work to do if they're going to pull anything off. So I just think we get a reaction. We've had 4 straight down days. We're oversold on the 5 and 15 minute extreme. I think we're going to get a bounce. I think we're going to consolidate and head lower to possibly on SPY. And the reason why we look at SPY a lot on this channel is because people trade it so often. And I want to start getting into ES a little bit more because I know that a lot of people are getting into futures again, micro futures. They're very affordable, and you can trade them almost 24 hours. So 416 area would start this zone that we're talking about getting into. I know you see this pivot here. I don't think it's super important. Yes, we're probably going to touch that and get a reaction off of it. Very similar to this one, this trend line that. There was only 2 points touched there. So to me, it's just a pivot. And you see we're pivoting around it. I think the same thing's going to happen with this one. I just don't see them being very clean. Okay. All right, let's show us the indicators here as well. You see we're curling back over. We finally got a cross on the daily time frame. So we're probably going to make a little bit of divergence, just a little bit when we get under here, which would cause us to bounce. now that we're very weak, and there's no divergence because we didn't make a low yet. So very weak here. We're curling over, we're turning over, and we're getting to the oversold. It's just now reaching the oversold area. So we have room to run. We definitely have room to run. As a matter of fact, we could have a lot of room to run. When we started getting down to this area and you're in a downtrend, this just tells us that the market is weak. I mean, look up here. We're just now getting into that oversold area, and we traveled 446 all the way down to 433. That's in the S&P, over 100 points in the oversold area, and then just bounced to go lower. Okay, so we have SPY on the daily still, so we're gonna go ahead and check out the Elliott wave count. This is gonna be the longer term count, and then we'll go for the alt count. Okay, here's the main count we have here. The bearish count, and they're both bearish counts. And I put the alternative count being the more conservative. I didn't want you to think that I didn't think we're, all along with these counts, we've counted this as from way up here as being our top, and at minimum, this being an A, this being a B, and we have a C, much lower. That's our conservative situation, and I still stand by that. I just think that this is possibly a 1-2 as well. And so with these counts going lower, it's just how do we get down there? That's all. So we have one that's conservative in the very near term, but it really just ends up the same way. So on this count, we have a 1-2 in the white, 1-2 in the yellow. And right now we're getting you see momentum starting to increase. Now we're getting that lower degree wave 1, which could bring us right into that consolidation area, or right above it, about 416, perhaps even spike a little bit lower into it, all the way down to the former 50% retracement and around the 414. Okay, that would be our lower degree 1, 2 with a pullback. And I think the pullbacks are going to be a little bit more shallow. They can go all the way back up to the usual 50-60%, but we can't expect it. And as usual, when we're doing 1-2s, we like to see zigzags. They're very normal in a wave 1 to 2, but we have to be careful of flats. They love to do these flat action too as well, where we think a low is in, price brings us into a bounce and just drops right below it to snap back up. That's a killer right there. It's a fake break, and then we get a huge squeeze, short squeeze. And so we have to keep an eye out for all those as well. That's why we can't, you don't trade all your money at once. You have trades, you get your stops out, or you add on to them. However your trade strategy is, you have to be ready for stuff like this. Now, the normal flat, we can expect a normal flat as well, which may not be as deep, but will take you, in a whiplash for a couple of days. Okay, so after you get this wave 1 and 2, these are placeholders. They're not exactly where they're projected to be. I want to wait till wave 1 gets in, and then wave 2. Right now, we can, if we go ahead and pull out our extension tool, we can go from the top. We can do the yellow one. We can do the yellow series. We do have our wave 1 and 2 for the yellow. And I'll take out all the unnecessary stuff right now. Our projection would be a 1618 would be a normal wave 3. So the yellow wave 3 could be in this range here at the 384. So we'll keep that in mind. But we don't want to rely on this one in particular. We want to really rely on the 1-2 in the turquoise. That will be our next projection. So we can keep those in line. because that will give us a better look at what the 1, 2, and the yellow would be if this is the case. Okay, so that's our count, and then we have we're in our turquoise minor wave count, 1, 2, 3, 4, 5, minute. And then our 3 in yellow, 4, 5, and then 3, 4, 5. So you have a lot of room to go, and we're looking to get out those lows, take out those lows. Okay, now our alternate. Our alternate is simply, the only difference is that this is a 5-wave move down here after we get a new low, and then we pull back for a wave 2 in turquoise, and then the same thing happens. You'll get another 1, 2, 3, 4, 1, 2, 3, 4, 5. This just says that this wave 2 might be a little bit deeper retrace than what we're expecting for the other scenario. Okay, so after you get a 1, 2, 3, 4, 5-wave move, you'll get a deeper retrace for a wave 2, get the bulls all riled up again, and then drop lower. So that's the only thing that we're looking for, is how deep is this next pullback going to be? It could be pretty deep because we get some divergences going on, and everybody's talking about the TNX and the bonds and such, and the dollar. And if those pull back, if those make a high, the market's going to get bullish and say, oh my gosh, it's all over, the rates are going down. And then they figure out that the rates are heading down because we're in a economic crash. So that's what the fundamentals be. I just follow charts. That's not my cup of tea. I'm not really concerned about when it comes to trading on what happens in the world or anything like that. The only thing that really matters to me is following the Fed. And I'll show you a little thing. We always kind of track the FOMC to see what they're doing, what's being projected. So that's something. And the economic data. The reason why we look at all the economic data is because I'll just pull it up here right now while we're talking about it. Let's pull that up. So you have the FOMC. What's interesting about this is the probabilities of staying. That didn't change a whole lot. It's 99.9%. What changed was, instead of thinking about a rate hike, there was a slight chance of a rate hike. You see, it actually switched. Now there's a slight percentage of a rate cut. That's the problem with the economy. That's an issue with it. So now when economic data comes out, it kind of, that can lead you to think, if there's bad economy, the rates are going to go down, and it's going to pull the market down eventually. Anyway, the Fed's going to have to pivot. You're going to have lower rates. All that good stuff. That's not what I'm teaching here. But that's interesting that things are flipping. The economic calendar, we look at these not because we want to know what the PMI numbers are. I don't look at the numbers. I don't. I want to see how the market reacts to it. But I know it's there at 9:45 a.m. on Tuesday. Turnaround Tuesday. If we get a bounce into Tuesday, we'll be looking for some sort of reaction to it. And that might bring us further up or down. That's not my concern to see what happens. New home sales, durable goods. Thursday's riddled with a bunch of stuff. So Thursday is going to be a big day. And then the PCE, that's what the market's got its eye on at all times. And guess what? After that, we have FOMC. Yay. And the next week on Wednesday. So the reason why that's important, and I'll show you on the 65-minute. The reason that's important is we have a lot of timing ratios that hit on that point as well. So let's go ahead and go down to SPY and a 65 while we're already down there. And we'll start off. We'll go opposite. We'll start off with the Elliott wave count. We won't do the alternative. It's kind of already, it's already on here anyway. So in the white, you have 1, 2, 3, 4, and 5. All right. And we have some timing concerns right about these timings. 10:30 10/31, September 31st, and I'm sorry, October 31st, and then November 1st, right there. That's FOMC. All right, that's Wednesday. You have Monday, Tuesday, and Wednesday all timing come together. That's a pretty good match there. Okay, and our regular bearish count, we're going to keep this both on the 65-minute time frame. What are we looking at? So right now, getting down to the nitty-gritty, seeing what we're going to do possibly on Monday into Tuesday in the following time frame. We have the lower time frames out here. We have a 1-2. In the yellow, 1, ABC expanding flat into 2. And now we're starting to head our degrees lower in the turquoise. And so in the turquoise, in the small here, it's red, and you can hardly see it. I get that. I'm not going to go to the 15 time frame or 15 minute or anything. You have a 1, 2, 3, 4, 5 for a 1. And while what got us on Friday was this crazy, Thursday or Friday was this crazy volatility. I thought that possibly could have been a wave 4 and then got us into a zone where we're going to go higher. So we were looking out for that. We put on some calls. We lost some money on those calls. So right now we have a 1, 2, the best way I can count it, at the end of wave 3, because right inside of here, that whiplash was a 1, 2, and then 3, 4, 5 to end wave 3. So we have a 1, 2, 3, and we're looking for on Monday into turnaround Tuesday for this microwave 4. So we should expect some sort of flat. It could be sharp. We had a sharp move here, so this should be a little bit more of a time consumer. So it could be a triangle, it could be a flat, it could be almost anything. Wave 4s and Bs are kind of the worst. But as long as you're engulfing this time frame with if you're trading options, if you give enough time, we should see a lower low. And that should bring us under these lows to confirm our bearish move. And then head lower to some of these ranges where we could have our more significant bounce. Not making a new high here. Where this is a 1, 2 in the turquoise. And we don't have that set up yet. So we don't have our ranges but I do suspect that this is going to be a solid area to reject off the 430. I do suspect that. We break above this 430. And I think we're in the scenario where this was a 1, 2, 3, 4, 5. We're retracing that whole move as a wave 2, and then we head lower. So that just says we're just going to get a little bit more. But after we have our 5 waves down, we're just not going to start breaking trend lines and heading new highs. That's just, it's negated. All right, so in the micro term, we're looking at getting a bounce into the 423 to 425 area on Monday into Tuesday. If we gap down and continue lower, then just this wave count, might be off. Or we have, maybe overnight we get a really small bounce and we head lower. Either way, this impulsive move, I'm looking for some sort of bounce into a much larger move. And that might be into the 430 area before heading lower. Okay, that's our primary. That's what we're going to consider our primary. We're getting a mode of wave down, a bounce to retest those areas, and then head lower. So let's go ahead and look at that on a traditional sense. So now that we're breaking down, making lower highs and lower lows, we're forming a wedge. So it looks like we might get a bounce off of this oversold move on the low time frames. We're forming a wedge within a wedge. Okay, so this is a closer look at it. We have a wedge with this very, very sharp, that's not sustainable trend line here. And I think we break above that trend line and head up to this next trend line, which you notice that would take us right back into that zone, the 425 to 423 zone. And that's just getting into the lower degree wave 4, just above it. All right, and that would head lower from that point. which just expands the wedge a little bit more. So once we expand this wedge out a little bit more, we get our bottom, temporary bottom. We have a wave 2, possibly brings us back up to this zone here. It's a big resistance zone. Wants support. And then we head lower to fill out a bigger wedge. You see this wedge forming on a higher time frame as well. And that could take us right down into this, you see all this zone here. Okay, so that's what we're looking at in the near term. I'm not going to continue on in 65 minute. We're going to take a look at SPX. Just a different point of view with the SPX. Again, we have this, we have the lows that we have to take out. And then we're getting right into these past resistance. Look at that, resistance and support. That's exactly the same area. Okay, and we might poke right through there. Come into the options, expect to move. Who knows? We have that pointing control there as well. And then break back out. So this might be an impulse move. We might even make it way down here and then get way oversold and then pop up for our retracement before heading lower. On the ES, we still have the same look, just in a different way. Okay, so we have the bottom of this wedge that's forming. We're right there towards the bottom here. You see I made this as a channel. This channel made sense for those two highs. So we're getting some positive divergence into the bottom of the channel. Also, that will be the weekly support. If we break down just a little bit more, we have the bottom of this wedge here, the larger wedge. And we have counted here as a 1, 2. It's a little bit different. This is exactly how, we're not going to go through NASDAQ, but this looks just like the NASDAQ where, let me scoot over here just a little bit more so you can compare it, where you have your one, this was the high up here. This is the high on SPY and SPX. This is the high here, but it counts just as well. We have a 1, 2, and it looks like we're finishing off wave 3. If you notice here, we have 1, 2, 3, 4, 5 for 1, 2, and all this mess. And then 1, 2, 3, 4, 5 for 3, 4, and 5. And we're looking for a bounce. And that's going to take us right in this 4,300 area. And it just so happens that's a pivot and the channel top. So that's something else we keep on another screen that we have. That will be some sort of zone. Maybe we get a flat pattern or something like that wastes a little bit of time, and we get up to this zone, and then we head down lower. This, just keep in mind that we can get down to quite a bit lower on this first move, possibly into, keep moving in this channel, possibly to the 4180 or even the options expected move. And the point of control, also the long-term pivot. We can get into all this area. It looks so far down. But keep in mind that this first wave 1 is pretty short, pretty small. And wave 3 is much bigger. So wave 3 is already bigger than wave 1. Now, wave 5 really doesn't have any limits. It can be the extension, it can extend larger than wave 3. There's really no limits. So we'll have to keep a look at structure and go from there and look at our indicators to see if we're going to reach down there. If we start getting oversold into that territory, we're not going to be trading all the way down here anyway. We'll be out of our puts. But that's what we're looking at for the future coming up. I hope this helps. If it does, please like the video. Help us out in any single way that you possibly can or are willing to. I appreciate you all being here, and we will talk to you soon. Have a wonderful day. I'll make another video tomorrow.